Hey, good evening folks, this is Shadow Stars coming to you with another video today. I'll be covering my interpretations, my reaction of AMC's Q3 earnings for 2022. So without further ado, let's dig it. Let's jump right into it. As you may know, AMC posted an earnings beat of both EPS and revenue, depending on which analysts and which figures you use. So according to this, the original Google poll, they posted an EPS of negative 20 cents per share and revenue of $968.4 million. The expected was negative 24 cents per share and a revenue of $960.97 million. So they beat on earnings per share, they beat on revenue. That means it's all good, right? Because they beat supposed forecasts. Not quite yet. So let me explain to you, and this video is, that's my goal in this video, to show you why those figures, just because they're beat, they're green, doesn't mean that, hey, that's good for the company. So what I have right here is I pulled from the SEC Edgar website, I pulled AMC's 10Q filing for Q3. So from here, that's where we get the revenue figure, 968.4 million total revenue. And you got all sorts of other information here. When we do a comparison to previous year, same period, 763.2. So if you just think about that, you compare this quarter, Q3 of 2022, to Q3 of 2021, oh my god, they did so much better. They went from 763 million to 968 million. That must be great. And then if you look at it on a 9-month period, oh, look at that. They did revenue of $2.9 billion versus $1.35 billion. Well, we can't fall into that trap, because what happened in 2021? I think everyone knows that we had a global pandemic and we had shutdowns all across the world, not just the US, not just in Canada, Europe, all across the world we had shutdowns because of this health crisis, this pandemic. So as a result, AMC, the company, they weren't able to really operate for a lot of 2021. So these figures are going to be skewed, especially the 9-month figures. But even the Q3 of 2021, those figures are slightly going to be skewed. So it's a given that, hey, they would beat these figures from last year. It's a no-brainer. But nonetheless, let's move on. What I have here is I've pulled the same information here, total revenue for AMC for the last 3 quarters of 2022. So in Q3, 968.4, Q2, 1.16 billion, Q1, $785.7 million. So this type of, just looking at the numbers in general, we know that movie theaters tend to do well, I should rather say, Q2 and Q4. Why? Because the big blockbuster movies hit theaters Q2 and Q4. For example, the big hit this year that everyone is raving about so far, Top Gun Maverick. When did that come out? That came out really in Q2. That's why Q2's figures are pretty elevated. We also had other great movies that came out. You had Thor come out. You had Minions come out, also during that same period, Q2. I'll be covering that more in detail, but I just wanted to point out that look at the revenue and look at how in seasons, basically, it shifts up. It ebbs, kind of ebbs and flows, kind of like a roller coaster, up and down, up and down. So we know that Q3 was not going to be as good as Q2. And as a result, we see that, hey, less revenue. So now let's look at the operating costs. Operating costs from Q3, $1.08 billion. Q2, $1.18 billion. Q1, $952 million. So it's not too unexpected that, hey, quarters where you're more busy, you have more traffic, you have more people attending, well, you're also going to have more costs. Film exhibition costs. Well, obviously you have more people watching it, well, okay, film exhibition costs are going to go up. Food and beverage costs, as more people buy your popcorn, your soda, your candy, whatever else, foods and concessions that you buy at the theaters, well, obviously those costs are going to go up as more people buy them. That's just a simple fact. But you also have relatively fixed costs. So you have fixed costs of some sort of operating expenses. You have fixed costs such as rent. Those figures will change quarter to quarter, but in general, they shouldn't change too much unless there's a big shift in how the company operates. So the number of theaters will definitely impact how what the costs are. You have more theaters to run, your costs are going to go up, because not only do you need to pay the rent or lease, you need to pay workers. That's all factored into the costs. You got to consider that. You have less theaters operating? Okay. Now, you acquire more theaters. Okay. Costs are always going to be changing. But the thing to really take a look at is going to be what I'm going to be stressing here. Operating loss. Operating loss. Operating loss. So we know that, hey, Q1, Q2, Q3. Q2 was the best quarter so far. And hey, look, operating loss, 16 million, 16.1 million. Not bad, right? Okay. Well, Q1 and Q3 were pretty bad then. 114, almost 115 million. 166.9, almost 167 million. Just an operating loss. So you want the company to be cash flow positive, meaning that, hey, you want the company to earn more money than it really spends. You don't want an operating loss, you want an operating profit. So let's go on to the next slide here. Different from just operating loss is now net loss. So the true amount money lost for the company in that quarter. So what happened? Q1, 337.4 million. Q2, 121.6 million. Q3, 226.9 million. That's some pretty big losses. And this is also where you would get, hey, what's the net loss per share? What's the EPS? You can grab it from here. 22 cents per, in this calculation, when it does net loss per share of your basic. 24, negative 24, so parentheses means negative values. In this case, negative 24 cents for Q2, negative 65 cents in Q1. So the company itself is still not profitable. Not only if you go back, operationally they're still losing money, but even in net, they're still losing money because there are also additional costs. I'll cover that later. But nonetheless, let's move on. This is also something to be concerned about. Something that you need to know as an investor. we're going to be looking at assets here. In particular, cash. Q1, they ended Q1 with $1.16 billion in cash. Q2 ended $965.2 million cash. Q3, $684.6 million cash. Every quarter they're losing cash. Well, how's that work? Well, the thing is that, hey, if every quarter you're operating at a loss, you have a net loss, well, you're going to be losing some of that from your cash. And another scary thing to consider is this. I pulled up here 2021 end of year. How much cash did AMC have end of year 2021? So December 31st of 2021, how much cash on hand did AMC have? Cash and cash equivalents. $1.592 billion. Almost $1.6 billion of cash. In 9 months, what are they down to? $684.6 million. From 1.6, nearly 1.6, down to basically 700 mil. $900 million. Where did it all go? That's the cash that they've lost. Now another thing to pay attention to. Outstanding shares. How many shares of the company are there? Well, 2021, end of 2021, how many shares were there? 513, basically 514 million shares. Okay. Well, end of Q3, September, how many shares are there now? Well, there's now 516.82 million shares of AMC. And remember that they created this ape share. They have 519.52 million shares of ape. So total 1.036 billion shares for the company of AMC, combining AMC and ape. So the stock of the company has been diluted. There's a lot more shares that now than there were back in 2021. And you can go back 2020, 2019. The company has been consistently increasing the number of shares. So it's diluting the value of the stock. That's why share price has also gone down. So right here, also from their 10Q, is this. As it'll say, cash and cash equivalents and restricted cash at the beginning of the period. So starting 2022, started with $1.62 billion of cash and cash equivalents and restricted cash. Well, the end of Q3 of this year only have $705.8 million of cash equivalents and restricted cash. So as I mentioned, it went from 1.62 down to 705.8. Meaning $914.5 million of cash equivalents, restricted cash, all burned in 9 months. Think about that. That's not almost $1 billion worth of cash equivalents and restricted cash gone in 9 months. And how much do they have left right now? $705.8 million. As of end of September. they can't do another 9 months of burning this amount. So further on, we go through a 10K. We have their leases. You can look at how their lease payments are structured. So going into 2022, I believe their total leases was about a little over $1 billion. So going into 2023, operating lease payments, 947.7. So hey, that's less than 2022. Well, okay, so in some aspects, they've been trying to close down not profitable theaters, places where it just doesn't make sense. But they're also expanding, because you take a look at some of these extra tables here and some of these notes here, basically these footnotes here. As of September 30th, the company has signed additional operating lease agreements for 3 theaters that have not yet commenced, with minimum annual payments of approximately $64.6 million, which are expected to commence between the years 2022 and 2024, and carry lease terms ranging from 11 to 20 years. So these figures, it's a little low, because it says minimum annual payments above do not include cash rent amounts that were due and not paid, which are recorded in accounts payable as shown below, including estimated repayment dates. Well, you got total deferred lease amounts recorded in accounts payable, $32.5 million within the next 6 months. But now let's look at how much of lease payments they've deferred. $30.5 million for ending this year. $82.2 million deferred. Because of the pandemic, rent, lease, a lot of that stuff was pushed back. Payments they got time to push back on. They were given more time to pay those. Well, you were given more time, you still need to pay them though. Much like what happened in the pandemic here, a lot of people that were renting, hey, they were given forgiveness, or they were given, leniency of, hey, you have more time to pay your rent. And just like regular people in their apartments and townhouses, etc., they were renting, hey, AMC as a company, they were able to push back rents, push back lease payments. Well, sooner or later, you have to pay those. Now, the next big thing is this: AMC's debt. AMC has a lot of debt. So, as of ending Q3, total non-current carrying value of corporate borrowings and finance lease liabilities, $5.2 billion. That's quite a bit of debt. So as we went before, this is a company that right now not turning profit. Just in operating terms, they're still losing money. Net loss, they're losing money. And they have this mountain load of debt. Well, it's companies, a lot of companies, they have debt. That's normal. No company runs with I don't want to say this. There are some companies that have virtually no debt, but I mean, it's not wrong for a company to have debt. The issue becomes when they're not able to service that debt. They're not able to have cash flow to pay that debt. And the thing is this. So part of their first unsecured debt, their senior secured credit facility term loan due 2026. The percentage on that. 3.1% back in December of 2021. That is now 5.75% as of ending Q3, September 30th, 2022. As you may or may not know, the Federal Reserve, Chairman Jerome Powell, they've been looking to influence monetary policy. And a way that they influence monetary policy is through interest rates. If you've seen the FOMC meetings, they've been increasing the federal funds rate. Well, this puts pressure onto the whole entire market because, hey, it's going to make borrowing money more expensive. When you had real interest rates basically be 0%, hey, people were borrowing money left and right. It's super cheap. The interest, very low. It's not hard to service interest when it's sub 2%. But hey, interest that was now what was once 3%, now 5.7%. On a value of $1.93 billion. So how does that affect your interest payments? Yeah, you have the principal amount, but you have to pay the interest too. That also goes into their Odeon term loan facility that they recently renegotiated, basically. If you look into that deal, the percentages, this is what it was. 10.75 in year one, and then 11.25 thereafter. Well, now that is no longer 11.25, that's along the lines of 12.5, if I remember correctly. So once again, interest payments. You have a lot of debt here. Right now, you're not showing any way. You're not showing cash flow that you're bringing in more cash than you're spending to start paying some of this debt. But hey, you have one good thing going for you. You did have, in 2023, prior to that renegotiation, you would have had more than $500 million of debt payment due next year in August of 2023. You were able to push that back. So good. So now you only have 128 million due. But look, you've pushed a vast majority of your debt. 3.3 billion due in 2026. Now, I know. Well, what if they just renegotiate that debt further down the line? I'm sure that will happen. But at what cost? What will the interest rates be on those on that debt, on those notes? These 6.3s, 5.7, 5.8, 6.1, these notes. Are you going to be able to get them at the same rate? Most likely not. So now your interest payments are going to continue to go up. That's basically having sandbags on your legs. It's dragging your company down. So all in all, so what? What's the path to profitability? Well, I want you to take a quick look at some of the figures I have. I've pulled this table here in the bottom. That's just information I compiled from the SEC website. Grabbed it from the AMC 10Qs and 10Ks. And what I have here in the top left is domestic box office gross figures. You can Google it and you can pull the same exact figures. So we looked through in previous slides Q1 through Q3. The company wasn't profitable, wasn't operating at a profit, it had operating loss, and it had net loss. Well, so let's go back to a period of time when AMC was actually net profit. They were earning money. So what I have here is 2018 and 2019, and I've broken it down into individual quarters. So if we take a look here, net earnings and loss. 2018, what quarters were they profitable? Well, Q1, Q2, Q4. Q3, pretty big loss. In net 2018, they were green, they were positive, they were in the black. $110 million net earnings for the whole year. 2019, well, what quarters were they profitable? Q2 and Q3, but they were in the red Q1 and Q4. Well, if you look through these figures, approximately looks like when they had $1.4 billion of revenue, 1.4 to 1.5, hey, they had operated at net profit. Sure, they weren't making a lot of money, but hey, they were above break even. So $20 to $50 million in profit maybe. So AMC would need at minimum 1.4 to 1.5 billion in revenue. Well, what have they been doing? So let's go back. Q1, sub 800. Q2 was the best quarter this year, 1.16. What sort of profit do you, profit increase do you need to be profitable? Well, I said that, hey, if we looked at 2018, 2019 figures, it was around 1.4 to 1.5 billion dollars in revenue. Well, basically you need 250, 350 million more dollars in revenue. So let's put that into comparison, or let's take that information and let's look at domestic box office gross. Because obviously, if the box office grossing more money, well, obviously that means that AMC as a company, as a movie theater company, more people are going there. So in 2018, 2019, we said 1.4 to 1.5 billion dollars in revenue. So what quarters did that occur? So let's just pull 1.44, Q2 of 2018. Q2 2018, $3.3 billion domestic gross. Q2 2019, $3.2 billion domestic box office gross. Well, best quarter so far this year, Q2, 2.3 billion. So I did a rough calculation though. Let's just say, hey, you know what? You need 3 billion. 3 billion in domestic box office gross will get you to that 1.4, 1.5 range. Well, you need nearly 30% increase from Q2. Nearly 30% to finally be profitable. That's a big ask. Because, let's take a look. What did Q2 have? What sort of releases? What I have here is table for Q2 and Q3 domestic gross top 10 for those months. So Q2, April, May, June. You had Sonic the Hedgehog. You had Fantastic Beasts: The Secrets of Dumbledore. Doctor Strange. You have Top Gun. Obviously, Sonic was still playing through. That's why it still is carrying over through May. In June, Jurassic World. You had Lightyear. You had Elvis. Q2, very good quarter, 2.3 billion, right? And a lot of it people attributed to Top Gun. Well, Top Gun came out, what? May 27th. So 1 full month of Top Gun in June and 5 days in May. That really pushed it up. But guess what? Let's look at Q3 then. What releases, big earning releases happen in Q3? Minions, Thor, Top Gun's still there, still have Elvis, still have Jurassic World, still have Lightyear. Next month, August, you still have Top Gun, Thor, Minions, Elvis. Top Gun, Minions. So, as much as you can say that, hey, Q3 is expected to be slow, well, you had decent grossing movies that came out. Jurassic World was still playing. You had Thor that came out. Thor was a big one. You had Minions that came out. Minions and Thor, those two alone in July, basically matched June performance of Top Gun and Jurassic World. Obviously, June was slightly better, but nonetheless, 320 mil, 301, 362, and 316. Your June, July are nearly identical for those top two. And you still have Top Gun operating. So Q3 wasn't as light as people try to skew it, saying that, oh, Q3 was, we knew that it was going to be light. Well, not really. They're just trying to spin those words. And the numbers don't lie. So now I can hear a lot of people complaining, oh, you know what? Q4 is going to save us. Q4 is going to be great. Okay. Let's pull up some information then. I pulled up a lot of the big releases, a lot of the known releases nationwide. That's going to be coming. That's set to come out or have already come out. So basically from April to December. We say that, hey, Q3, slow quarter, no big movies. Well, Minions came out, Thor came out, Bullet Train came out. As I mentioned before, Top Gun was still playing, Jurassic World was still playing. But let's look at Q4 then. Everyone keeps on preaching, Black Panther, oh, Avatar sequel. Well, okay. Black Panther, when is it coming out? November 11th. So Q4 figures. How long do they have? Black Panther's only operating then for Q4 figures for a month and a half. Oh, Avatar. Okay, Avatar's coming out December 16th. So half a month for Q4. Where are the other big hits for Q4? Is there something along the lines of a Minions release? A Thor release? Do you still have support from Top Gun? Q3 was bolstered, really, by Top Gun. If you go back, Top Gun still did 111 mil for July. And October, Black Adam was the big hit. But how does that Black Adam's brand new release performance compared to Top Gun in July. More than a full month after it initially released on May 27th. I have the breakdown here monthly. June, July, two best months of 2022. 1.1 billion, 968 million. Is Black Panther going to surpass Top Gun? Is Avatar going to surpass Top Gun? Well, Avatar's only out for half a month. Black Panther's only out for 1.5 months. So how is Q4 going to be cash flow positive, as Sean Goodman said on the earnings call? I don't see it happening. I think that's just crazy reaching for the stars optimism. It's hopium. Let's say you have the best quarter, or sorry, best month. So let's say, let's look at July. July had Minions come out early, you had Thor, and you still had Top Gun going through. Or, you know what, let's just do June then, because Top Gun came out end of May basically. You still had Jurassic World, and you still had Lightyear come out. June. 968 million. Well, you can't expect November to do the same figures as June. Black Panther would only be out for basically half a month in November. Okay, so then December. Well, December, it'll have been out for 1 full month. Well, Top Gun was out for a full month by June. And okay, half a month of Avatar. So 1.5 of Maverick then, let's say. 1.5 of Maverick. So let's say 1.5 of that figure. Let's make it a bill easy. So 1.5 billion in December. How much in November? Half? Half of June? You factor in October part of October stuff at a reduced rate. Add on half of June figures. What's that come out to? You had October at 468. Let's say November does 700. To make numbers super easy, let's do 450 for October, 700 for November, 1.5 for December. It's okay. How does that compare? Let's pull up a calculator here then. 1.5. So 1.5 billion plus 700 million. And what did I say? $450, right? Plus 450. 2.6 billion. 2.6 billion. And let's go back. What did I say? You would need nearly 3 billion in quarterly domestic box office gross. You need that much to turn a profit in Q4, or any quarter really. Well, you're gonna need Avatar, Black Panther, and all these other movies to do ridiculously good to hit above 2.6. So then let's factor into other stuff that was covered in the earnings call. What did CEO Adam Aron say? Well, he gave out 7 things. Their eyes are open for opportunity. So they're open for expansion. He's open for ideas of expansion, grabbing more movie theaters. That, he said he doesn't have an update, but okay. This, I agree and disagree in certain aspects. I agree that, hey, if you're able to expand your business to have if you're able to obtain a more profitable theater and replace your less profitable theater, that makes sense. But at what cost is that what's the cost going to be associated with that? If you're taking over a theater from a different company, let's say Regal is selling a theater or something, at what cost? Already you are burning money. How much more do you have to spend so that in the future down the line you can earn the more money back? You need to do some cost-benefit analysis. You need to be careful with how much money you're spending. And that's something that was also reiterated on the earnings call. So number 2, renovate existing screens and increase premium screens. Those offerings, the Dolby, the IMAX, etc. Okay, so what does that tell me? What that tells me, and what that sounds like to me, is this. Capital expenditures for a certain degree. Kind of ties in with number 1. You're going to be spending more money, so more increased costs in improving your theaters. How much money does that generate? What's your ROI on this? How long can you? What's the time period that you expect to break even and finally earn a profit on that investment? Number 3. The multi-year installation of these laser projectors. If I recall correctly, on the call he said, what, $250 million investment in installing these new laser projectors? That's a pretty big investment. $250 million. That's not cheap. You have over $5 billion of debt. You're burning through, just this past quarter, more than $200 million. And you're going to spend another $250 million over a course of several years improving and changing these laser projectors. So you got to factor in cost of these laser projectors. You're spending the money to buy them. How much more did the previous type of projectors cost? What's the cost to run these new laser projectors? Does it save money? Over the course of how many years does it take for you to be profitable on it? Number 4, their partnership with Zoom. How much money are they going to make with this partnership? They're saying 17 cities, sometime 2023. I'm not sure this partnership makes sense. On the surface, hey, it looks good because, hey, we're partnering up with another company. Oh, Zoom reached out to us. But what does AMC offer that's better than a convention center? Better than a hotel? What companies are going to be spending money to go to AMC to do this type of meetings? What's the cost of that AMC will have to put in so that they can have this partnership? Is there new equipment that they need to install? New microphones? Different projectors, different screens? Do they need to spend money on different tables, different chairs, etc.? The demographic could be very different too. A hotel meeting, yeah, you mentioned, oh, catering. Well, okay, catering at a hotel versus catering at an AMC theater. The type of foods that you're going to have available and eat. Does that mean AMC is changing and expanding their concessions? Then what's the cost associated with that? What's the profit margins that they can have on that? Number 5, AMC branded credit card. What's the reward? Who is going to open up an AMC credit card? And what sort of benefits and rewards will that credit card offer? A lot of different credit card companies, Visa, Discover, MasterCard. A lot of these credit cards, when you have different companies, like Citi, Chase, Capital One, etc., American Express, I mean, you have rewards. 1% cash back, 2%, 5%, whatever. Different reward programs, different cash back amounts, different events. What is AMC going to be rewarding people for? Like, what's the rewards? What's the cost to AMC to set this up? And how much money will they make from this credit card? Number 6, entry to the popcorn market, first half of 2023. How much money are they going to be generating through the sale of popcorn? AMC is entering into more of the grocery store retail type of popcorn sales late to the market. There's already several well-established types of brands. So are you going to pull people away from buying popcorn from whatever, Boy Scouts, Girl Scouts? Those type of fundraisers? People are going to go less to the groceries. They're not going to buy the Orville, Redenbacher brand popcorn or whatever locally branded name grocery store brand popcorn, whether like a Giant or Sam's, Costco, whatever brand. Are they going to not buy those and buy AMC? Are you going to be able to pull proper market share? And what's your profit margins? Overall, how much money are these initiatives going to make? So far, number 1, this opportunity, when I'm thinking more of expansion possibilities, well, that requires spending more money initially. You spend money now so that, hey, you can make more money down the road. So short term, not good. Number 2, you're renovating spaces, so you're spending more money. You have more costs. Well, costs upfront now so that, hey, you get a better viewing experience, better experience overall to theaters. If it brings in more people, that's good, but nonetheless, increased costs. Number 3, laser projectors, spending more money, increased costs. Credit cards. What's the cost to set it up? How is this being funded? What bank is associated behind this? HYMC, their Hycroft Mining investment. Are they up on this investment? No, they're negative on this investment, if I recall correctly. At what point is this going to pay off for them? Are they going to be investing more money into this company? Are they done with this company? All these initiatives, all these bullet points, hey, sure, they look good maybe on the surface, but you dig into it. How is it really positive? How is it really bullish? Short term, none of them really they don't really look good. The biggest thing is this. The company is losing money quarter after quarter. You're not being profitable. 300, 100, 200 plus mil loss. Over 900 million cash burn in 9 months. You're going through a lot of money real quick. You don't have much money left. You have debt covenants that require minimal liquidity of 100 million. So subtract 100 million from this. You have $605.8 million of cash equivalents, and restricted cash by end of September 2022. And as we did the calculations, if Q4 is not profitable, if you lose money again in Q4, if you pull the same figures of Q2, how much money are you going to lose? Another 100 million. If you pull another Q2, you lose another 100 million. So from 605, you're down to 505, or more, or under that. That's my concern. That's why I didn't think that this earnings call really had anything great about it. There was nothing positive to speak about. You can tout this, that, oh hey, we've been beating EPS, we've been beating revenue of analyst forecasts. That doesn't mean anything. That just means that, hey, their forecasts are they're being much lower. They don't think the company will do as good. But sure, okay, so hey, you beat it, but nonetheless, still doesn't help the fact that the company is burning through bucket loads of cash every single quarter. The business model is not working for this company. They, in my guess, my educated guess based on the research I've been doing on AMC, it's because you have way too many theaters that are not profitable. Movie theaters can be profitable. I'm sure there are several that do make a lot of money, great margins, but not all of them are. You need to cut the ones that are not. But the problems that AMC might be facing is that, hey, they have these contracts, they have these lease agreements, these rent contracts that they're locked into for 5, 10 plus years. And it's difficult finding someone to take control of those leases, all that space. What company is going to be spending all this money in this global economy, in this current economy where inflation is sky high? Who's going to be spending all that extra money? So that's why I'm weary of, if the company were in better financial situation, then it would make sense. Right now, when other companies in your same industry, in the same sector, in the movie theater business, when they're going through hardships and they're looking to sell their theaters, if you can get them at a big discount and you know that they're profitable, then hey, makes sense. Spend that money now, so hey, you'll make more profit later. But right now, you're hemorrhaging so much cash so fast. You're not profitable as a company to begin with right now. I think it would be a better option to, hey, as fast as possible, cut off all the movie theaters that aren't profitable. You need to remove the weights, the sandbags around your legs and your ankles holding you down. I think that movie theaters can survive. It's just that I don't think AMC as a company is run well enough for it to, at its current state. It needs to downsize, in my opinion. And the global economy right now, the world economy, the current state that it's in, is not conducive to a good, prospering movie theater chain right now. We're in a recession. We have high inflation. More people are living check to check. You're paying more in rent. You're paying more in food. Paying more in gas. You're paying more in electricity. Everything is more expensive to buy. You're paying more for everything. Your cell phone bill. Everything costs more. Your wages aren't increasing to offset that sufficiently, so you have less money to spend. Well, you have less money to spend, meaning consumers, people like you and me, you have to be more careful about how am I going to spend this money? Am I going to spend this money paying $10, $15 a ticket to go to AMC? Buy their popcorn? Buy their soda? You know it's all marked up. How much surplus money are you willing to spend? That's a big obstacle right now facing the company. Q4 might be, hey, you got all these holidays, Thanksgiving, Christmas, New Year's coming basically. Yeah, people might be spending for those. But come January, February, March, get closer towards tax, right before for taxes, things might slow down again. I just think that overall, in conclusion really, Q3 needed to be a lot better. If you look at those movies that came out, they didn't do that bad. Them blaming that, hey, Q3 has slow releases. Well, compared to Q2, Q3 wasn't that bad. Q4 looks worse, honestly. You only have 2 big hits, but they're not really in the big meat of your Q4. A lot of it will spill over to Q1. But Q1 historically is really bad. So for the next 6 months as a company, are you going to be making profit? Good chance that you're not. So half a year longer, the company, it doesn't turn a profit. You still have that debt, you still have those interest payments. Interest rates will probably continue to be hiked up, so your payments will have to be increased. Inflation still going on, so cost of goods and services will continue to go up. That's all going to eat into your profits. And this is at a point where you're not making money. So that's why I don't think that it's a good sign. Nothing game changing to this company right now. They need something that's a game changer. Or else, the bear thesis, the short thesis for this company, still lives on. So that's the video for me. I'll be paying attention to Q4 when it gets closer to Q4. Probably peek my head in to see what any big releases, what type of box office numbers they're doing, and I'll be doing my own calculations to give a prediction, just like what I did for Q3 of what I expect them to do revenue-wise, EPS-wise, etc. But barring some big change, if things go basically at this current trend, looks like next 2 quarters losing more money, at least. Well, that's gonna be it. Thanks for listening. If you listened through the whole video, hopefully you found this helpful, educational. Always down to be proven wrong. If you have different comments, things to rebut, feel free. If you want me, I'll do my best to address them if you want me to. So leave a comment down below. You can also hit me up on Twitter if you want to talk. And let's debate then. Let's talk about this company. If you think you're super bullish, then tell me why. Show evidence, bring facts, bring data. I brought 10K filings, 10Q filings, domestic gross box office figures. I brought actual data, hard data that you can trust and rely upon. These aren't tinfoil hat theories. These are statistics, these are numbers. Bring your side if you think the bear thesis is wrong. Let's debate. Let's be courteous, cordial to each other, and we'll see. Maybe we can reach a common ground, a common understanding. Until next time, folks. Shadow Star signing out. Peace.